Tonight on Market Call, David Burrows, president of Barometer Capital Management. He'll be taking your calls and emails on North American large caps. Good evening and welcome to Market Call tonight. I'm Mark Bunting. Thanks a lot for joining us. As always, if you'd like to talk to David, you can call us toll free at 1-855-326-6266 or send an email to marketcall@bnn.ca. And your timing might be fortuitous. Hello, David.
How are you, Mark?
Because when you were here last, you were quite defensive on the markets, but we were just talking off air. You've seen a couple of things lately that lead you to believe that things might be getting better, and you've been changing the mix of your portfolios?
Yeah, we have. You know, it's been a tough few months for a lot of folks, and certainly we've had our helmets on and trying to defend as best we can. And we've had a lot of cash in our portfolios. You know, really what caused us concern, we take our signs from the market, and you had very difficult commodity prices, more specifically commodity stocks leading up to that. You had a bunch of concerns in technology and machinery and some of the economically sensitive stocks. You saw rotation into defense. And the work that we do that looks at market breadth, like the percentage of stocks doing well, has narrowed and narrowed and narrowed, which means a deteriorating market. In the last few days, though, we've seen a couple things that are more encouraging. Of course, when you're looking for a turn up in the markets, you want to see leading groups turn up, like semiconductors and some of the commodities and that type of thing. But one of the things that we've been all taking our cues off of what's going on in China. And certainly the Chinese market has been no picnic, you know, since last fall. It's been very difficult. We saw some good strength at the end of last week. One good day followed by another very good day, which we'll call a follow-through day on high volume and a good percentage move. That was Friday. And the indicator that we use to look at whether money's getting put to work or not turned higher. So that was sort of the first positive, China looking a little bit better. And then when you look at what's happened over the last 4 or 5 days, 6 days in technology, which tends to be a leading group, it's been severely underperforming over the last few months, had some pretty good strength. Some of the leading stocks actually broke out to new highs. And so I think that that's a positive. Now there's still, you know, trouble with oil, and there's still trouble with some of the other commodities. But the last point I'd make is that for the first time in a while, copper really did hold the lows going through this correction. It's the one commodity that really did hold up technically and sort of seems to be trying to get swung around positive. And so if you could say copper is sort of the Dr. Copper, you know, give us a sense for where economic expectations are. It's looking a little bit better. China's looking a little bit better. Japan's actually looking a little bit better. So given the fact that the market's pretty oversold and there's a ton of bad news in the market, I think that there is a good shot that we could get at least a short-term rally. Then we'll see whether it turns into something more than that. So we've put a little money to work in the last few days.
Based on those things that you're talking about, what have you been doing in terms of putting money to work, shifting out of certain sectors and stocks into other ones?
Well, as you know, we were very concentrated in yield-oriented investments, which we continue to be because we think that's where investor appetite is. But we did put a little bit of money back to work in a few what we would call secular or multi-year themes. Some investment in companies that benefit from the aerospace cycle because there's like 6,000 planes going to get delivered over the next few years. So there's a big theme there. Some of the machinery companies that benefit from capital spending because corporations do have cash on the balance sheets. And then things that benefit from the search for productivity, like some of the technology companies, software, for instance, which has recurring revenue. Some of the companies that benefit from the move to cloud computing. Those would give you a sense. And then certainly, interesting enough, some of the retail companies, restaurants and retailers in North America have started to do better because in fact, the consumer actually is picking up spending. And so some of the leaders in those groups, like Starbucks we'll talk about today, are seeing some good strength. So there's some pockets of strength, and we'll see whether it's something that carries on.
All right, David, I understand that the phone board is all lit up just for you. All sorts of calls lined up and emails as well. And as we go to break here, and before we come back and take your calls and emails, we will take a look at the Barometer High Income Pool over a number of different time frames.